Hi everyone, I'm Tomer Dicterel with Crossfield Strategic Partners. Today I want to walk through some of the tax-related features of permanent life insurance that often come up in retirement and estate planning conversations, what they are, how they generally work, and what you need to discuss with your tax and legal advisors to understand how they apply to your specific situation. I want to be clear up front. Nothing in this video is tax advice. Tax treatment depends on policy structure, ownership, individual circumstances, and applicable law. Everything I cover here should be reviewed with your CPA or tax advisor before you make any decisions based on it. With that framing in place, let's walk through the features. The first is the death benefit. For most individual life insurance policies, the death benefit paid to named beneficiaries is received income tax free under current federal tax law. This is one of the foundational features of life insurance in estate and legacy planning. Proceeds generally pass outside the probate process and, for income tax purposes, are not taxable to the beneficiary. Estate tax treatment is a separate question and depends on how the policy is owned. If the policy is owned by the insured, the death benefit may be included in the taxable estate. Your estate planning attorney can advise on ownership structures that may address this. The second feature is tax-deferred cash value growth. In permanent life insurance policies, including whole life and indexed universal life, the cash value component grows on a tax-deferred basis. That means you are not paying taxes on credited interest or growth as it accumulates inside the policy each year. Taxes may come into play if you take withdrawals that exceed your basis in the policy, or if the policy lapses with an outstanding loan balance. Your tax advisor can explain how this applies to your situation. Third is policy loan access. One of the structural features of permanent life insurance is the ability to borrow against the policy's cash value. Policy loans are generally not treated as taxable income because they are loans, not distributions, as long as the policy remains in force. This is why some clients incorporate policy loans into their retirement income planning. However, there are important considerations. Outstanding loans reduce the death benefit and cash value, loan interest accrues and compounds, and if the policy lapses while a loan is outstanding, the loan amount may become taxable. If a policy is classified as a modified endowment contract, or MEC, different and less favorable tax rules apply. Your tax advisor needs to be involved in any cash value access strategy. Fourth, while life insurance premiums are generally not tax deductible for individuals, the after-tax dollars used to pay premiums fund a vehicle that may provide tax-advantaged access to cash value and a generally income tax-free death benefit. Whether that trade-off makes sense depends entirely on your situation, and that analysis belongs with your financial and tax advisors. Fifth is the estate planning dimension. Life insurance can provide liquidity in an estate, cash available to address tax obligations, debts, or other settlement costs without forcing the sale of other assets. Some clients use irrevocable life insurance trusts, or ILITs, as an ownership structure to potentially address estate tax inclusion of the death benefit. An ILIT is a legal structure that must be established and administered by qualified legal counsel. It is not something an insurance producer sets up, and the rules around funding, trustee selection, and crummy notices require an experienced estate planning attorney. I can explain generally how the concept works, but implementation requires your lawyer. Life insurance has a number of structural features that make it worth understanding in the context of a broader financial and estate plan. Whether those features are beneficial for your specific situation depends on factors your advisors are best positioned to evaluate. If you'd like to explore how permanent life insurance fits into your planning, visit us at Crossfield Partners or reach out to schedule a conversation.